Before anyone knew its name, Black Thursday had already stolen more money in a single morning than most Americans would earn in a lifetime. It started with the kind of chaos that feels scripted in disaster movies. A Wall Street so crowded that even the pavement seemed to sweat, brokers shouting over each other like sailors on a sinking ship, and a ticker tape so overwhelmed it lagged nearly an hour behind reality, an hour in which fortunes silently died. By the time the sun hit the windows of the exchange on October 24, 1929, the myth of endless American prosperity had snapped like a cheap violin string. The Roaring Twenties had promised the country a glittering staircase to the sky, but that morning, the whole staircase collapsed under its own shine. Prices plunged before most investors had even finished their breakfast. Rumors raced faster than facts. Panic sold faster than reason could speak. The more the market fell, the more people tried to outrun the fall, like sprinting downhill only to find gravity laughing behind you. Yet by the end of this terrible day, a strange calm drifted over the floor. A group of powerful bankers marched in, bought up blue-chip stocks, and posed as heroes dragging a wounded nation back from the ledge. Newspapers printed hopeful headlines. Politicians exhaled. Everyone told themselves the worst had already happened. They had no idea the real earthquake hadn't even arrived yet. Before the crash became a national nightmare, the 1920s strutted across America like a decade that believed it was invincible. The country had just survived a world war, conquered the automobile, wired itself with radios, and discovered a fresh addiction to consumer credit. It was a party with no bouncers and no closing hours. If the decade had a soundtrack, it was jazz blaring through smoky clubs. If it had a smell, it was the perfume of money. Easy, fast, and dangerously sweet. Stocks didn't just rise. They levitated. Ordinary people who once saved pennies in jars now bragged about doubling their money in a few months. The streets had their own financial gospel. Buy today, borrow to buy tomorrow, and don't worry about the bill because the market only goes up. Margin buying became the national hobby. You could put down $10 to borrow 90 more and call yourself an investor. It didn't matter if the companies you bought didn't actually make much profit, or any profit at all. Numbers on paper were the new religion, and everyone worshipped. Economists and politicians joined the chorus. Smiling experts declared America had entered a new era of permanent growth. President Herbert Hoover, barely settled into his chair, kept repeating that prosperity was not just strong, it was eternal. Newspapers agreed. Bankers agreed. Even shoeshine boys were whispering hot stock tips while polishing the brogues of millionaires. The whole country became an echo chamber telling itself the same bedtime story. Nothing bad can happen. But beneath the champagne bubbles, the rot was spreading. Factories were churning out more goods than people could buy. Farmers drowning in debt shoveled their hopes into the dirt, praying prices would rise. And while share prices soared into the clouds, the real value of companies stayed chained to the ground. America wasn't building an economy anymore. It was inflating a balloon and insisting the rubber could stretch forever. Still, no one wanted to hear it. Not the bankers, not the newly minted middle-class investors, not the crowds lining up outside brokerage houses as if waiting for tickets to the hottest show on Broadway. Everyone was too busy dancing to the music, certain that when you live in a golden age, you get to keep the gold. What they didn't notice was the faint cracking sound under all that glitter, the sound of a mirage getting ready to crumble. The cracks didn't appear all at once. They arrived quietly, like faint tremors under a city too busy celebrating to feel the floor shifting. While the newspapers kept screaming prosperity, factory warehouses were filling with unsold goods. Assembly lines that once roared with confidence now slowed to a tired cough. Industrial production dipped, then dipped again, but Wall Street shrugged it off. Why worry about reality when the stock charts still looked like stairways to heaven? Farmers felt the pain first. They had borrowed heavily during the war years, expecting demand to stay high forever. Instead, prices fell so low, that many were practically paying people to take their crops. Banks in rural towns began to wobble as unpaid loans piled up like snowdrifts. But the brokers in Manhattan barely noticed. A farmer losing his land didn't make headlines. A stock breaking its record high did. By late October, though, even Wall Street's optimism began to twitch. Rumors crept through the city like cold drafts. Some investors whispered that prices were inflated, that too many people were borrowing money they didn't have, that the market was balancing on a pin. Others brushed these worries aside with a confident wave. It's just a temporary dip. They said this with the same tone someone uses while standing on a burning porch, insisting the fire will put itself out. In brokerage offices, tension buzzed like a live wire. Margin calls began showing up on the desks of men who had never imagined they'd receive one. A clerk might approach a proud investor with a shaky voice. "Sir, you'll need to deposit more cash to cover your position." The investor would laugh too loudly, the way people do when terror is nibbling at the edges of their voice. Cash? Of course. Just a minor adjustment. Then he'd hurry out the door, praying to find money he didn't actually have. Behind closed doors, the titans of finance gathered around polished tables. They told each other everything was under control. They had built the system themselves, after all. Surely the machine would obey its makers. One banker might lean back, puff on a cigar, and mutter, "The public is just nervous. A few reassuring words will calm the storm." Another would nod, pretending to believe it. They clung to confidence like a life raft, never admitting the raft was leaking. But the public felt something the bankers wouldn't say out loud. A tightening in the chest, a sense that the music was speeding up, but the dance floor was shrinking. Stocks began slipping faster than excuses could catch them. Prices dipped one day, then plunged the next, and the murmurs grew into shouts. People rushed into brokerage houses demanding answers the brokers didn't have. You could feel the panic thickening in the air. By October 23rd, the market's facade was so thin you could practically see daylight through it. The illusion was trembling, held together by little more than hope and denial. Everyone tried to act normal, to pretend nothing catastrophic was coming. But history has a way of ignoring human delusions. And the next morning, when the exchanges opened their doors, the mirage finally shattered. When the doors of the New York Stock Exchange swung open on the morning of October 24th, 1929, the air itself felt wrong. Heavy, metallic, waiting. No one called it Black Thursday yet. That name would be carved later, after the screaming, after the stampede, after the sound of America's economic heartbeat stumbling into a brutal arrhythmia. But the moment the opening bell rang, the panic that had been circling Wall Street like a hungry wolf finally lunged. Selling began instantly. Not nervously, not cautiously. Violently. It was as if thousands of investors had woken up with the same nightmare and decided without speaking to run for the exits at the exact same second. The ticker tape clattered like a frantic Morse code operator tapping out the message everyone feared. Down, down, down. It fell behind within minutes. First 10 minutes, then 20, then 45. And still the numbers plunged faster than it could print them. Outside the exchange, crowds swelled so tightly that police had to push people back just to keep the sidewalks functional. Office workers stood shoulder to shoulder with wealthy bankers, all craning their necks to catch the latest scraps of news. Rumors shot through the street like sparks. A major bank failed, a big firm collapsed, a tycoon lost everything before lunch. No one knew which stories were true, but panic didn't wait for verification. Inside, the trading floor became a battlefield of desperation. Men who normally moved with crisp confidence now shoved, yelled, and clawed for attention. One broker supposedly shouted, "There are no buyers, none," as if disbelief alone might summon one. Another collapsed at his desk, staring at the numbers like they were ghosts. Even the seasoned floor traders, the ones who prided themselves on staying cool while the world burned, looked shaken, their faces aslick with sweat. By late morning, the sell-off snowballed into pure hysteria. Margin calls detonated like grenades across the market. People who had borrowed 10 to 1 or 20 to 1 watched their positions evaporate, then plunge them into debt before they could even reach their broker's door. Phones rang so relentlessly that operators could barely breathe between calls. Secretaries fainted. Messengers ran until their legs buckled. A journalist later wrote that the sound of the day wasn't shouting. It was fear-breathing. And then, just as the panic reached its breaking point, the so-called cavalry arrived. A handful of powerful bankers, led by Thomas Lamont of J.P. Morgan, strode into the exchange like generals entering a war room. They gathered in a private office above the trading floor, where they pledged tens of millions of dollars to stabilize the market. It was a theatrical move, the financial equivalent of a doctor slapping a bandage onto a bullet wound. One delegate walked onto the floor and loudly placed a massive order for U.S. steel far above the market price, hoping the gesture would soothe investors. It worked, briefly. The room exhaled, prices steadied, newspapers rushed to declare the crisis contained. By the final bell, the market had clawed back some of its losses. Bankers smiled for the cameras. Reporters cheered the Morgan miracle. Even President Hoover expressed confidence that the economy remained sound. Across the country, people went to bed believing the worst was over. But the truth was uglier. The bankers had slowed the avalanche, not stopped it. Beneath the surface, trust was already dead, and no amount of theatrical optimism could resurrect it. Black Thursday was only the first crack in the dam. The real flood would arrive in a matter of days. The temporary calm that followed Black Thursday lasted about as long as a dying match in a hurricane. For a brief, fragile moment, Americans convinced themselves that the crisis had been contained, that the bankers' heroic pose had stitched the wound shut. But underneath that thin layer of reassurance, fear was spreading with a speed that no headline could outpace. And when the market reopened after the weekend, the illusion of control was obliterated. Monday, October 28th, would earn its own grim nickname, Black Monday. From the moment the bell rang, the floor of the exchange convulsed with panic, far more violent than anything seen on Black Thursday. It was as if the fear that had been temporarily muzzled finally ripped itself free, snarling and ravenous. Prices didn't slide. They dropped off cliffs. Investors didn't sell. They fled. Brokers scrambled to process orders that poured in faster than any human being could read them. The ticker tape dragged behind reality by nearly 2 hours, making it less a source of information and more a torture device, feeding people outdated nightmares. Across America, thousands of small investors who had spent the weekend praying for a miracle instead watched their savings dissolve in slow motion. Families gathered around radios expecting good news and got catastrophe instead. One man in Chicago reportedly stared at the latest figures, whispered, "That can't be right," and walked out of his house without his coat. His neighbors didn't see him again for 2 days. The country was unraveling at the emotional seams. And then came Tuesday. If Monday was a freefall, Tuesday, October 29th, Black Tuesday, was the bottom dropping out of the universe. The market collapsed with such ferocity that even veteran bankers stood frozen, unable to comprehend the numbers. Nearly 16 million shares traded. A volume so monstrous, the exchange had never imagined it was physically possible. The sound was described as a roar, not from voices, but from paper. Slips, orders, reports, all being ripped, stamped, thrown, or swept away in the storm. A broker might shout into the phone, "Your position is gone," only to be answered with a hollow silence. Another might plead with a client for instructions only to be told, "Do anything," a phrase that meant nothing and everything in the middle of a financial inferno. Firms that had seemed invincible the week before were now collapsing like sandcastles under a violent tide. Margin buyers were wiped out. Speculators were ruined. Even the wealthy elite, the ones who had smirked at warnings, found themselves watching their fortunes scatter like ashes. Rumors of suicides began spreading, some true, many exaggerated. Newspapers ran with dramatic headlines, painting Wall Street as a battlefield littered with financial corpses. A man falling from a high-rise became the grim symbol of the era, even though the story was often more myth than fact. Still, the fear was real, and the despair even more so. Brokers joked darkly about installing suicide nets, but the humor barely masked the terror. Outside New York, the shockwaves thundered through every city and town. Banks watched depositors line up demanding withdrawals. Businesses hesitated on payroll. Factories braced for slower orders. Everyone felt the same invisible hand tightening around the country's throat. People kept asking the same question: when will it stop? But the truth was that it wasn't just a crash anymore. It was a contagion, a psychological one, hollowing out trust, hope, and financial stability all at once. Black Thursday had been the warning shot. Black Monday and Black Tuesday were the cannon fire that followed, tearing the facade of prosperity to shreds. And yet, the real suffering, the part that would define an entire generation, hadn't even begun. When the dust settled after those catastrophic days, America woke up inside a nightmare it didn't yet have the vocabulary to describe. The crash had been the explosion. The Great Depression was the long, smothering smoke that followed, creeping into every street, every factory, every kitchen table conversation. What happened next wasn't loud or cinematic like the trading floor on Black Tuesday. It was slow devastation, the kind that eats through a country inch by inch while politicians insist everything is fine. Banks were the first to bleed. Thousands of them, many small and fragile, had lent money recklessly during the boom years. When the crash wiped out investors, those loans turned to dust. Depositors panicked and lined up in front of brick buildings with iron doors, begging for their savings. In town after town, people waited hours only to hear the cold, flat sentence that would haunt the decade: "The bank is closed." The sign would go up on the door, and everything inside, their savings, their security, their future, vanished with it. Factories followed. Production didn't just slow, it collapsed. Companies cut shifts, then cut workers, then shut down entire plants. Millions lost their jobs. Breadlines became as common as streetlights. Men who once bragged about promotions now stood in line in the cold, hat in hand, waiting for a bowl of thin soup. Mothers skipped meals so their children could eat. Families tore pages from newspapers to insulate their clothes. Entire neighborhoods sank into silence, except for the sound of hunger. And yet, in Washington, President Hoover radiated optimism so bright it felt delusional. He insisted the crisis was temporary, a hiccup in the business cycle. He spoke of fundamental prosperity, even as children rummaged through trash cans behind restaurants. Hoover believed too deeply in American individualism to see that individuals were drowning. His policies trickled downward in name only. Everything that trickled was misery. The psychological collapse was just as brutal as the financial one. A country that had spent the 1920s believing it was chosen by destiny, a shining symbol of progress, now stared at empty pockets and empty futures. People stopped dreaming. Men who once planned for careers now hoped only for a day's work. Women stitched clothing from flour sacks. Children dropped out of school to help scrape together pennies. Hope, the great American export, ran low. But the most bitter irony was this: the people who had created the mess, who had inflated the bubble, who had pumped the economy with blind optimism and reckless credit, they didn't pay the highest price. Ordinary workers did. Farmers did. Families did. The humble, the invisible. The ones who never saw a stock ticker, but lived with the consequences of one. Greed had been a party for the few, but the hangover belonged to everyone. As months turned into years, the Depression tightened its grip. Banks continued failing. Unemployment soared above 20%. Homes were lost. Shantytowns, cruelly nicknamed Hoovervilles, sprouted outside major cities, built from scrap wood, cardboard, and despair. At night, the cold wind would whistle through their walls like a reminder. The dream is gone. And yet, beneath all the suffering, something else was building. A rising anger, a sense of betrayal, a national realization that the system built to protect prosperity had instead protected the powerful and abandoned the vulnerable. The crash had broken more than the economy. It had shattered the illusion that unregulated markets were unshakable, that endless growth was destiny, that greed was harmless. This was the new America, humbled, wounded, and waiting for someone to acknowledge the truth. History likes to pretend it whispers its lessons, but the story of 1929 doesn't whisper, it shouts. It points a trembling finger at human greed, at our talent for building illusions so dazzling we forget they're made of glass. The crash was not just a financial event. It was a nationwide reckoning, a brutal reminder that prosperity built on speculation is prosperity written in disappearing ink. In the years that followed, America tried to make sense of what had happened. Economists dissected numbers. Politicians delivered speeches thick with excuses. Bankers insisted they were victims of unforeseeable forces. But deep down, everyone knew the truth was simpler. The country had fallen in love with a fantasy of permanent growth, perpetual wealth, and a market immune to gravity. People believed stocks could rise forever, that borrowing endlessly was harmless, that the rules of reality had been suspended just for them. Black Thursday shattered that fantasy. Black Monday and Tuesday ground it into dust. And the Great Depression forced Americans to live in the ashes of their own overconfidence. Yet the most haunting part isn't the suffering itself. It's how familiar the mistakes look from the future. Every generation thinks it's smarter than the last. Every era believes it has engineered a system too sophisticated to fail. And every time, the same old pattern reappears. Speculation, euphoria, denial, collapse. It's a loop as old as markets themselves, spinning endlessly because human nature hasn't changed. What 1929 teaches more than anything is that greed is patient. It waits quietly, disguised as optimism. It slips into boardrooms and headlines, into casual conversations and hot tips, persuading people that risk is just another word for opportunity. And by the time the warning signs appear, the music is usually too loud for anyone to hear them. But there is also a kind of beauty in the aftermath, not in the suffering, but in the clarity it brings. When the illusions melt, people remember what truly matters: work, stability, fairness, protection from the powerful who gamble with the public's future. The reforms that eventually rose from the ruins, new regulations, deposit insurance, labor protections, were not born from genius. They were born from pain, the kind that demands change because the alternative is unthinkable. The echo of 1929 hasn't faded. It hums beneath every bubble, every boom, every headline promising a new golden age. It warns us that markets are not gods, investors are not prophets, and confidence is not a safety net. It reminds us to question euphoria, to doubt easy money, to recognize when optimism starts sounding like a sales pitch. Most of all, it tells us this: the cost of forgetting is always greater than the cost of learning.